Hi ma'am, good evening and welcome to Colliers TV. Thank you for taking time off to be with us today despite your very packed schedule, especially now with troubled times which our industry is facing and with weak sentiments, relatively slower sales volumes. What are the challenges? Are you facing the challenges and how are you overcoming them?
Thank you for having me on the show. And going to your question, well, it's been a tough time for the industry for the last 3 years, I would say, not something very recent. Demand has been muted, and a large part of, I think, has been the fact that investors have moved out of the market. Prices have kind of stagnated, and so you've seen multiple investors going out. Market is very, very driven by end users. So it's not that there is no end user demand, there is, but it's just the size of that demand has shrunk because it's dominated by end users. And then when you start looking at end users, I think it's just that they're taking time to make up their minds because there's a lot of confusion out there in terms of noise in the marketplace, whether it be delays on deliveries, whether it be with respect to RERA or judicial activism, or the fact that prices have not necessarily moved upwards. And I think all of that is kind of leaving customers in a wait and watch mode. And then combine it with the overall economic environment not necessarily having created that much of huge optimism around new jobs, new opportunities. Real estate, obviously being a lag indicator, tends to be muted.
So what are we doing to overcome those challenges? Is there anything which we can do really?
Well, as a company, I think for us the focus always has been look at what an end user is looking at. And an end user is really driven by A, location, B, budget, and C, on-time delivery, and then the reputation of the builder or the developer, as the case may be. And whatever land parcels we've selected in the last few years, we've been very careful about being in markets which are pertinent markets of current demand and not necessarily markets which are depending on infrastructure to be created in the future. So there's existing social infrastructure, existing physical infrastructure in these locations, and therefore there is a certain robust end user demand that exists there. Looking at product sizes, looking at ticket sizes in an appropriate manner, not getting completely carried away with making everything large, everything luxury, and therefore not being affordable to a bulk of the people. And a huge focus on time delivery in the last few years. I think we've been pushing the whole execution journey. Last year we delivered about close to 3.5 million square feet. We've so far handed over about 1,500 homes in the first 5 months. We'll be delivering another 2,000 homes in the next 6 months. So I think a lot of that focus and the fact that the brand stands for a lot of transparency and credibility has helped sales performance. So I wouldn't say that we're doing big numbers, but relative to competition, if I look at each micro market that we operate in, our market share is definitely higher than, say, what it was a year back. Because at the end of the day, in difficult times, there's also comfort with credible brands as far as the customer is concerned.
Sure. Would you say that the corporate name and the Mahindra name tag has helped you in a way overcome certain challenges and probably immunized you from the sales?
Yes, one part of it is brand, which is inherited legacy, but I think the other part of it is also the effort that has gone into the organization in terms of processes, in terms of systems, in terms of customer focus, that again have helped create an environment where the entire organization across the value chain is able to gear up to the challenge of being more transparent, being more accountable, and being more customer centric.
Sure. But margins seem to be shrinking.
Right.
Cost of capital is really, relatively for you, maybe you're getting capital at a cheaper rate. But for our industry, generally speaking, I think cost of capital, land, and raw material, everything's going up. But the sales price has definitely, people are looking at giving discounts today. So how are we coping with that?
From an industry perspective, you're right. I think people do not easily have access to capital, particularly people who've not focused on execution in the near past. Capital is definitely costlier. Construction costs have gone up. Prices are not moving anyway. And everybody's, I think, seeing that margin pressure. From our perspective, cost of capital is not so much a large issue. We are able to maintain a cost of capital which is in the late single digits to maybe just about 10%. But yes, construction costs have gone up. Prices necessarily haven't moved anyway. Cost of sales has gone up. And I think the whole focus really is on keeping the execution engine going so that you have quick turnaround, both in terms of sales and in terms of execution. Also, a lot of focus at the design stage on value engineering so that we can get better control on cost. Buying across our projects across the country, that's bringing an economy of scale. So I think these are some of the very traditional manufacturing solutions that we focused on to ensure that you don't have operating margins compression.
Right. No, I think you'll have definitely excelled in this space, and congratulations to you and your team. And we work a lot with your team, and we really admire the stringent process which you'll have for selecting a land parcel. So, who's the brain, and what is the procedure you'll follow for that?
Well, it's a fairly rigorous process, as you said. Sometimes the business development team gets frustrated because it takes a long while to close a deal. But I think our point is title is primary, technical due diligence is primary, because that's determining everything that you do in terms of a good location, and that's determining everything else that you do in terms of being customer focused. If we are not able to ensure that the title is fine and perfect, we will not really be able to deliver on time. We do not launch without all our approvals in place, so we actually get all approvals in place and then launch. That again ensures for us that there are no surprises on statutory changes, design changes, going back to customers saying we plan to do something, we're doing something else. So a lot of that has helped us get a lot more focused on our diligence because we want to ensure that everything is in place before we launch. It means a longer time for diligence, but it also means that once we've got a land parcel in, we are immediately good to go in terms of execution. I think the team has worked hard in building those processes. What's interesting for us has been the fact that unlike many players who tend to be location centric, I mean, you have people who are strong in Mumbai, people who are strong in Bangalore, people who are strong in NCR. We've actually done fairly well in whichever market we've gone in. So we entered Bangalore recently, we went into Hyderabad a couple of years back, Nagpur a few years back. And I think that process orientation and building an institutional framework has actually helped us replicate success in multiple markets. Because you're not really depending on one person to create an organizational template. The whole organization is creating that template.
Yeah, which is it's difficult because I don't know if I should say it, but a lot of guys have tried to go on a pan-India basis, but have not been as successful as you have been. And I think it's working in your favor. But you all have, as a company, consciously stayed away from office space. What's the reason for that?
Well, I think it's a bit of legacy in a way. I think when we started out, we were building the World City business and the Mahindra Lifespaces business. So the former was focused on large townships which have industry locating there, and the latter is of course based on residential developments. There was a certain capital intensity to the World City business where we're actually building out 1500 acres, 2000 acres, 3000 acre parcels of land with all of the infrastructure, then getting in companies to come in and set up there, and then getting the housing and other infrastructure around it. It didn't make sense for us to pursue commercial with, at that time had no exit also in terms of a developer being able to come out of it. So we are kind of locking up capital for long durations of time in long gestation projects like the World City, and commercial would have been one more such. We also wanted to grow the residential. I think we've been a developer who came into this space as a corporate, not because we had an inherited legacy of land, but because we chose to get into the business. And so actually from the day we've started operations, we've acquired every parcel of land we've put together. So it was therefore very important for us to be able to allocate capital to also grow the residential business. And which is why it was a trade-off choice in terms of residential versus commercial. Also, I think if you look at the whole demand driver perspective, residential is a B2C business. It is focused on the end customer. You look at the whole urbanization context, a lot more of nuclear families. It is the largest segment in all the asset classes in real estate today. And it is the asset class which also deals with the worst currently in terms of its reputation, its profile, the level of transparency. So we really thought we could make a difference there.
Sure. But now with residential going through the slowdown and commercial, everybody's so bullish on commercial, do you look at it as a missed opportunity or?
Well, this industry is cyclical. I mean, and every asset class goes through its cycles. A few years back, people were making the same comments about commercial, saying commercial is dead.
Yeah, right.
And everybody kind of moved money from converted commercial land parcels into residential. created an oversupply situation in residential. Now everybody is running after commercial. I think asset classes will always be cyclical, and it's important as an organization for you to know which asset classes you want to focus on, what is the difference that you want to make, and then go after it. It's not that we can't do commercial. We do B2B in the World City, so we understand that customer. But I think the two businesses are distinct, the two asset classes are distinct if you look at residential and commercial. And we've currently focused on building a certain strength, a certain uniqueness, a certain differentiation with respect to the way we do residential. We're just not frittering away organizational bandwidth on multiple asset classes.
Right, and I'm also a firm believer that happy times for residential will be back soon. So I think that's a good area to focus on. Of course, in tune with the residential plan of yours, Happy Nest. I think that's interesting, the affordable segment, and I think you all have, that's your latest foray into that field.
Space we entered 2 years back. It's a space most developers have not looked at, particularly the segment we are talking about, which is 10 to 20, 25 lakhs. I think people above 25 lakhs, people are looking at that segment, 25 to 50, 50 plus. This is a difficult segment. Returns are low in terms of margins. It was really important to get a good volume. It's really a volume play business. It's a business which has largely been dominated by very local fragmented players, and we thought it's an interesting space from the perspective of actually targeting a huge underserved market in India. When everybody is shying away from it, but the bulk of the demand in India sits there, and if we can crack that piece, then it's really a large volume opportunity.
And you're able to do that and maintain margins in spite of the green concept which you meant, or are you coming down on the green home concept for the affordable space?
At an overall principle, I think sustainability is very close to us. It's something we're very passionate about. We believe that if urbanization has to happen in India in the right manner, and if urbanization has to be a boon and not a bane, then you really need to approach it from a sustainable development approach. So that's a core underlying philosophy across everything that we do, whether it's the world cities, whether it's life spaces, or whether it's happiness. Now, the degrees to which you push yourself in terms of resource efficiency, in terms of green principles, may vary depending on the segments. Happiness comes embedded with the same green thinking philosophy. Maybe we don't go high up on the curve in terms of measuring ourselves as a platinum rated building or having platinum features, but we definitely are clear that we have grey water treatment, we have sewage treatment plants, we have rainwater harvesting, we have other green principles in terms of the whole ambient air temperature within our homes, ensuring the kind of material we use allows cooling, cross ventilation principles. We think that's even more important in that segment because it's not necessarily that you are actually sitting and fitting all of these homes with artificially air controlled environments. So it's important to actually make ambient temperature work and water work and electricity work at lower costs, because that's a segment which is sensitive to maintenance costs. But it's just that we are not maybe going right up the curve in terms of green buildings, but definitely all happiness projects are green certified.
Yeah, and what you're doing is really good for our country. So good. And shifting focus away from Mahindra, talking on more general aspects of real estate, our industry is plagued with so much of negativity. You as a corporate must be witnessing a bit of that. So how do we overcome that? What can we do to overcome?
Well, I think a part of it has been called upon ourselves as an industry, and I don't think I'll be popular for saying that, but it is a fact that there have been certain players who over the years have delayed projects, have not handed over, have diverted money towards newer acquisitions and not necessarily on execution, which has earned the industry a bad name. But on the other side, there are equally many more developers who've done a good job, who focused on creating right products for customers, focused on delivery, focused on execution, and been able to make a difference in terms of the urban landscape in India. Unfortunately, I think it's the bad part of the industry that always tends to get more publicized and more well known, and that creates its own reputation issues for the industry. RERA in one way I think will be great for the customer, in one way will be difficult for the industry as early transition, but in another way can actually enable this industry to move towards being really an industry and really getting industry status and really getting a lot more organized and systematic in its approach. That itself will help address reputation issues.
But from what I know, are you all already RERA compliant in most ways?
Well, yes, I think because we don't launch without approvals at all. So I think the first level of compliance is there. So today, if RERA asks us to start registering our projects, we can effectively register every one of our projects without having to wait for approval compliance. That's one part of the story. The second is in terms of changes, having to go back to customers. That's something we anyway follow. So that's not really an issue. I think what will come in for us from a RERA's perspective is looking at the whole aspect of money getting put into escrow. We currently anyway use fund flow which comes from a particular project in that project, but the extra fungibility that you may have at a certain part of the journey of the value chain of the project would get lost. So to that extent, the additional fungibility that you had over and above what you really needed in that project gets lost, but otherwise, yes, we would be largely compliant.
Yeah, it's going to be tough for most developers, and the changeover is going to take some time, but hopefully in the long run it will be good for all of us. Just one last question. What would be your advice to young entrepreneurs entering this field from a development perspective?
I think the canvas is large. It's an exciting industry to be in. Very few industries that give you an opportunity to create something from scratch almost every day. And if you're creating homes, you're creating workspaces. That's where people spend all their lives. So it's a delightful space to be in from that perspective. The only, I think, what I'd like to leave as a message to young entrepreneurs coming in is be bold, be ambitious, but also be cognizant of how much you can really stretch yourself in terms of what you take up. Deliver and show performance on the ground before you kind of spread yourself too thin and then struggle when the market is down.
Fantastic. I think those are really wise words for people entering the industry. Thanks so much for your time. Appreciate you spending time with us and allowing us to host you on Colliers TV.
Thank you.